Hello everybody, I'm L.A. Little and this is today's short take. You know, one of the things that's characterized this particular year, and it's probably worth talking about, is range trading. It's a subject that, actually I've written about quite a bit, written about it in books as well. And that is that, when you have ranges that develop, usually they develop in sort of an equidistant manner. In other words, you can divide them up and you usually get about equal distant sizes to those ranges. And as you can see in this one, there is kind of equal sizes. You kind of got this line coming through the middle here that divides up the two ranges. When it gets to the lower part of it, it tries to hold price and go higher, and if it can't, right, then it tries to get all the way back to the bottom. Vice versa, when it gets to the top, if it can't hold price or extend it, right, then it comes back towards the bottom of that range. Inside that, you've got the large range, and you could divide this out. If you pull it out to say a weekly, then you have ranges that develop on the weekly that also have the same sort of characteristics. So in other words, you have this range, clean this up, do it again, you have this range, and then below it you have another range that's just about equidistant. It's, for whatever reason, I'm not going to try to say it's because of this or that, but for whatever reason, that's the way these things typically line up, and you can visualize them. When it's inside a range, how it gets to that range and how it trades inside that range is important. The direction of the trend as it comes into the range is important, and how it gets into the range is important. And if I look at the S&P 500, the S&P 500 is more of a sideways, much less biased range. Even though the bias is slightly to the upside, given the way it's trading, you can actually trade this both ways. In other words, you can take entries selling at the top of the range, right, buying at the bottom of the range. And why is that? Well, because you don't have any blow-off top move that defines, a significant range. You don't have any kind of reversal move that tells you it's going to break down. You don't have, there's just nothing here to say, hey, this thing is just going to, it's going to A, break higher, or B, break lower and carry, right? That's what you worry about when you trade in a range. You don't want to get in at this level, selling it, expecting to buy it here, and then next, before you know it, you find it here, and then, you know what I mean? You don't want that to happen to you. And so you have to be careful about how you trade a range. Is it a sideways range, right? Is it a slightly biased, a very strong upside, right? Or a bias to the downside, or a very strong downside? And how you come into the range reflects how you want to trade that range. And in this particular one, you actually can trade it both ways. And if you've got a long portfolio and you want to trade against it, trading against it with a range type mindset is not a bad way to do it. I'll be talking about ranges this week. This is a slightly biased to the upside range that can be traded both ways. That is today's short take.